markets like South Africa, where debit orders are a very important part of the recurring payments business, at the same time, if a debit order fails, which they do all the time, how do you get that customer to then pay without waiting for the next month?
It's quite an ambitious undertaking. And going to the beginning about MultiChoice figuring this out. Of course, MultiChoice, I think one of the most Pan-African companies, if not the most Pan-African company. And so they've probably built a lot of underlying technology, and they've probably built a number of relationships. And so now, as a moment when you're starting from day zero, like how did you think about now building your own tech?
You as a consumer, right, could opt in and say, look, I want you to aggregate my bills for me. Make it easy and efficient for me to pay my bills.
Yeah.
Because we know a lot about you, you could picture us bringing a credit partner to the table and saying, look, not only am I going to help you pay your bills efficiently, I'm going to help you pay them in a way you can afford.
Yeah. Welcome back to the F Square podcast, where we sit down with the leaders shaping the future of fintech in Africa. Today's episode is all about Moment, a company purpose-built for the realities of African commerce. In markets where cash still dominates, but mobile money, cards, and bank transfers are growing rapidly, Moment helps enterprises cut through the complexity. Whether it's faster collections, unified reconciliations, or gaining unique buyer insights from over 20 million customers across 44 countries, the platform is designed to help businesses get paid and scale. To tell this story, I'm joined by Joel Yarbrough, CEO of Moment. We'll unpack how this strategic venture between MultiChoice and General Catalyst came to life, what makes the approach different, and why resilience, data, and partnerships are at the heart of the expansion strategy. If you want to understand how enterprise payments in Africa are being reimagined, this is the conversation to tune into. And I think we'll go to, the very beginning. Moment is a JV between MultiChoice and General Catalyst. And I'd like to understand the thinking that actually led to the creation of Moment. And, just what was going on at MultiChoice, what kind of decisions needed to be made, and how did we end up with Moment?
Awesome. Thanks, Samora, and thanks for the opportunity. For the listeners or the viewers who aren't familiar with MultiChoice, MultiChoice is the oldest entertainment business in Africa, operates in 50 countries. They really brought digital television to the market, pay television to the market, and currently serve more than 100 million TV viewers a month, 22 million paying households across essentially all of sub-Saharan Africa. At the same time, their business is being transformed, as are all businesses, by the internet, most notably the growth of streaming. So when they looked at their franchise, their trust relationships, the huge network they've built to support that business over time, confronted by a transformation of the business towards streaming, that said they have to really start to leverage some of those assets that they have in more ways, right? To monetize them in more ways. So they made big investments in other areas, their streaming platform, their digital rights business, investments in sports gaming, et cetera. And then they were looking at this extremely large 100 million viewer number and said, there's just got to be something that we can do with payments. And so they reached out through their network to a set of experts, of which some of them very close to me, and said, look, the opportunity feels like, how do we move cash users to digital users, open up the digital economy, build a trusted network across Africa that really unlocks digital payments for the entire ecosystem, because MultiChoice is fundamentally a mass market platform that serves people from the very high to the very low. And build something new that really leverages that history, but built on global technology with global quality technologists that can serve Africa, but without compromise. So that was really the idea, was taking these stranded assets and building them into something that serves the entire market.
Got it. And speak more about the whole idea of there's the mass market and converting cash users. Especially in the context of within the existing payment space, I think there's a lot of focus on online payment options, whereas the market is still primarily cash driven. Even in markets like Kenya, where you'd expect M-Pesa to be, I think a good chunk of transactions are still cash, right? So was that the core thrust? How do we build a network that is built on the reality of like people are still cash, making payments to cash, and we need to meet them where they are and then slowly convert them into digital paying customers.
Yeah, and I think it's exactly what you said. You have to meet the customers where they are. So if you look even in the most digital markets for our existing customers and for MultiChoice, their customers pay in cash all the time, whether it's for trust reasons, whether it's for their monthly cash flow reasons, whether it's they're habituated for certain types of payments to pay when they buy their groceries, etc. But there's a lot of reasons why people do what they do. And you can't wave a wand and change that overnight. Similarly, in markets like South Africa, where debit orders are a very important part of the recurring payments business, at the same time, if a debit order fails, which they do all the time, how do you get that customer to then pay without waiting for the next month? Right? How do you catch them at a spaza shop? How do you catch them at a retailer? How do you catch them with a relevant online payment method? So the idea was, how do we build a single platform that addresses the entire low end and medium end of the cash market, provides a complete set of digital services, and then also invests in things that we believe strongly in, like real-time payments, for instance, PayShop in South Africa, to provide the full breadth of where the market is and where the market is going, so that a merchant or a retailer or a biller doesn't have to make that choice, doesn't have to devote their resources to trying to guess what their customers are going to use. We can provide them one platform that collects any receivable across the entire network, and then they get one contract, one recon file, one settlement file, one client portal, one view of where their cash flow is coming from, where it's going to come from next month, et cetera. And then because of the enormous amount of customer data that we have working with such large businesses already, we also have a strong point of view on who's going to pay you on time, who's going to pay you late, what channels are they going to prefer. If your bill date falls on a Tuesday today versus Saturday, in a previous month, we know, is that customer even going to be in a store to pay in person, or should you try to get them to pay a different way? So we're able to bring together payment reach and data across the entire market in a way that we think is pretty unique, and at the same time unlocks a lot of the investments that other payment companies and other financial services providers have made to bring them into our network, so we can serve the whole market together, because we have a shared vision, right? Our shared vision of moving the market from cash to digital over time, so people get access to better quality services, more affordable services, more secure services, and we bring people into that digital economy over time.
And that it's quite an ambitious undertaking. And going to the beginning about MultiChoice figuring this out. Of course, MultiChoice, I think one of the most Pan-African companies, if not the most Pan-African company, and so they've probably built a lot of underlying technology, and they've probably built a number of relationships. And so now, as a moment when you're starting from day zero, like how did you think about now building your own tech, right? What could you plug from MultiChoice, and what did you have to build on your own? And what were the core design choices around that technology build out?
I mean, when you talk to anybody in Africa, trust and reliability and resilience are critical, right? Whether that's network outages, whether that's power outages, whether that's API outages at a partner level, et cetera. So we knew what we didn't want to do was put ourselves in a position that we couldn't scale resilience across the market. So we started life, multi-cloud, multi-data center. We've built an enormous amount of what we think is global quality technology around solving that problem. And that meant, to a large extent, our stack is a clean stack. We have 97% of our code was written entirely by us. We have very small dependency on things that predated us. And then we were able to bring in the best network partners, the best banks, the best switches to work with that were able to meet the SLA requirements, the pricing requirements, the quality of service requirements that we thought were needed. And then as we work through the entire market, our goal is to really bring in almost the Avengers of payments, right? Not just what we do ourselves, but what we bring in from the partnerships as well, to offer that single platform to the market, but in that way that is resilient, right? So our approach very much was, let's look at where the trusted partners are today, where the right payment methods are today, where the expertise is, but let's not presume that we should be leveraging code that already exists. Let's start minimally, right, with clean stack, and then build outwards from there. which means that there's features that we haven't necessarily gotten to yet, but we've definitely tried to build where the volume is, where the market is, and focus on delivering. If you think about the iceberg that is payment complexity, we've tried to get as much from the under the waterline built first, and then features to some degree come second, because we want to make sure the basics are being done well.
Yeah. And I did some research and I found, I think you're already doing over 1 billion in annualized TPV for MultiChoice. And that's quite an impressive figure. What have you switched over for MultiChoice? What are you able to do for them at the moment, right? And so, just walk us through some of the capabilities you've built for them first, and then how this is manifesting in their business from like a efficiency or cost perspective. Like what has materially changed for them?
Yeah. So if you look at market by market, let's start there, right? So in the South African market, we've been able to partner very broadly, and we have essentially 100% physical ubiquity. Every Spaza shop, every petrol forecourt, every retailer, we can collect digital payments there today. We're plugged into every bank, either directly or through partners. We offer all the relevant online payment methods for the market with very, very few exceptions. And it's really just the debit order capability that we haven't taken a product live yet, but you can imagine we have something in mind there as well. So we have a ubiquitous platform that we think solves the needs for almost everyone in the market. We're very close to that same point in Nigeria, which is the second largest market for MultiChoice, and have built out a very long tail, low LSM agent and in-person network there. We're partnered with all the major wallet apps. We offer all the relevant online payment methods and are really going hard there as well. And then across the remainder of the markets, we offer a mixture of mobile money, bank transfer, cards, and cash, depending on the markets. The benefits that they have seen, and I don't want to put words necessarily in their mouth, but one is that resilience, right? As I said, adverse situations, network power, et cetera, happen with frequency. And so we're able to minimize disruption to the consumer, minimize disruption to the downstream partners, so people can pay and have confidence that their bills will be reflected, right? Their payments will be credited, regardless of what's happening in the ecosystem. So they're seeing a lot of that resilience. In one of the markets in East Africa, they told us that their inbound customer calls for payments related concerns had dropped by 90%. Because we're able to solve so much of that disruption. And at the same time, we've been able to revisit the economics of a lot of partnerships. We've been able to bring new partners to the table and create opportunities for them. So the actual average cost of payments, both digital and cash, has actually gone down dramatically across markets as we work to refactor how the payments are flowing, et cetera, which is always a fun conversation with partners, but ultimately we share the same goal, which is how do we provide the best quality service to the consumer, to the merchant, and then shift, as I said, the market from cash to digital. So they're seeing resilience, they're seeing quality of service, they're seeing pricing. And they're seeing reach as well. In addition, we've been able to bring some new payment methods to the market. So PayShop, as an example, we did the first consumer-to-business payment in South Africa on the PayShop rails, which was then followed by MTN doing wallet top-ups on their side. So we feel like we've pioneered certain things in the market, and you'll continue to see that from us as we go along, where we're trying to balance, again, where the people are with where we think the market is going in a way that is still appropriate without going out on a limb, but to do the right things for the merchant and the consumer.
And, that is quite, just looking at South Africa as a market on its own, that's a lot of heavy lifting within a very short space of time, right? Because, you have to integrate to all these kind of people and you have to really go deep, to be able to be at every Spaza or every, petrol station in the country. That's a lot of work, right? So, there are two questions that emerge from there. What was the hardest part about building out that network so quickly, right? And where have you seen surprising volume? Like, wow, as Joel, I didn't expect to see this much volume coming from this specific payment type.
Yeah. The hardest part of anything is building the trust, right? Particularly where we're coming in and disrupting existing relationships.
Yep.
We're inserting ourselves in the middle of things,
Yep.
etc.
Yeah.
So there's definitely a two-sided trust building process that's essential. But ultimately, I think the right type of partner realizes we're going to make the pie bigger together. In terms of what's really scaled in a surprising way, I would say in the Nigeria context, and this has been well covered. I think the e-wallet apps, right? Not mobile money, but the e-wallet apps, the OPays, the Palm Pays, et cetera, are driving just an enormous amount of volume. And are growing very, very quickly. In the South African context, open banking is going very well, not just PayShop, which is certainly for most users will feel like the most secure way to pay, where they don't give control of their credentials, they're pushing funds from their bank, et cetera. And then the Capitec Pay open banking implementation, we have a direct partnership with Capitec. We work with them on a lot of things. And then the payment experience that they offer through the open banking rails is exceptional, incredibly fast, very secure, and ultra high conversion. So it's been a very, very good product for us.
And on the cash side, probably just walk us through how like a typical cash payment works. What kind of technology you've built around this? For instance, I make a payment and I need to go and pay on cash, right? And of course, I think you've also introduced some kind of QR capability. So just walk us through how that whole payment flow works, where you need to make a DSTV payment or a MultiChoice payment, and you go to your local spaza shop. How does that entire thing work?
Yeah, so there's three interesting scenarios on the cash side that I'll walk you through. That's a good question. But maybe before I say that, let me also point out something is that people across Africa are very cash strapped, right? So even workers who with direct deposit of payroll into a bank account or absolutely banked workers, it's very, very likely that they'll only have money in their bank account for about 2 weeks out of the month. So they'll get paid, something like the 25th of the month. By the time the 7th rolls around, they've literally either spent or withdrawn all of the money from their bank account, and their bank account has zero. So if you're expecting them to be able to pay you for something after the 7th of the month, it's going to be a thin trade, and you really start to see credit card authorization rates, debit card authorization rates collapse at that point because people simply don't have any money. What they do have is a wad of cash in their hand, right? So living across the street from a spaza shop, going down the streets to a mall retailer, going to a petrol forecourt is something that they can do and take cash from their wallet and directly hand it over. So the use cases that we handle, among others, one is if you're a biller, right? If you're a MultiChoice, a credit card lender, an insurance company, et cetera, you've got a periodic payment, you can take that bill to literally any location and provide your account number, your policy number, your invoice number, your national ID, some identifier. And we'll recognize that identifier in our network. We'll tell the endpoint, the teller, hey, this is the person, this is the account, here's how much money they owe. They can hand over that cash. And essentially within 10 seconds, that account will be credited on the back end, and in the case of TV, their service will be restored. In the case of an insurance bill, their policy will be updated. So it's an incredibly satisfying experience for the consumer because they have confidence. They can pay for themselves, they can pay for a family member, et cetera, in cash. If you're an e-commerce retailer, right, and the customer comes to the end of the cart and then they fall out of the cart because as it turns out, there's no money on their debit card, what are you going to do? You're going to chase them by email and by SMS saying, come back to the cart and pay with your debit card. But we give them as another alternative to say, oh, you know what? Now you can tell the customer, send a PayShop transactions, do an open banking transaction with Capitec, go to any retailer, et cetera. And that same experience of having an identifier, either a transaction ID that the retailer can give them, or an account ID or a mobile number, all of those are then payable across the entire network, electronically or in person. And then the third scenario, if you're a physical retailer, lay-by sounds old-fashioned, but it really meets a lot of people's credit requirements to be able to say, I want that thing, and I'm going to pay you in 3 months, 6 months, et cetera. And now without disrupting their lives, without paying for a taxi to go to the mall, they can now make a lay-by payment, every single month or every couple of weeks against something that they want. So you're able to support instant online purchases, right, by walking across the street to the spaza, instant bill payment, or even periodic lay-by payments as well. So it's an incredibly flexible platform we built. with all of these different types of channels aligned to one single receivables platform on the back end that works for most types of businesses.
Yeah. And it seems you've taken the view of just working with partners because, in some instances, how some payment companies get into like the physical spaces through launching their own kind of POS product. But, for you guys, what you've said is that, listen, we'll work with people who already have POS products because we are more interested in, how the service we're providing to the merchant and the options we're providing to the merchant. But speaking of that, how does that all manifest when you talk about, one portal, one API, one contract, right? And I think the best way to look at this is, for you in the past, let's say with MultiChoice before Moment, right? It was definitely not one portal, one reconciliation. It was probably handling multiple things. How does a treasury team or a finance team now interface and see all this? And what does that mean in terms of like their operational workflows, their daily workflows, their ability to reconcile, their ability to move cash around? How does that all interplay? And what do you think actually that means in terms of cost and value? Is it that valuable to have like one reconciliation, or it's just a marketing thing to say?
Yeah, no, that's a great question. The complexity. So when we talk to the large enterprises in particular, what they tell us is, hey, this value proposition of more payment methods, more countries, et cetera, sounds wonderful. But in reality, our back office is so scary, we're afraid to touch things. We've talked to merchants who have as many as 75 people doing daily reconciliation with many bank accounts, many tokens they need to log in, files everywhere, et cetera. And they're just completely, their buffer is full with complexity. We spoke to someone yesterday, right, that's very entrenched and actually a thought leader in the debit order space. But they said, look, we're doing continuous clearing of millions of debit orders as they come in. Our team is swamped. In both cases, what they're really looking for is, can you bring it together? Can you do this reconciliation for us as a service? Can you give me pre-aggregated data? Can you mark it off against my own bills and tell me what's been paid, not paid, and really provide a partnership model, not just a pure payments model, to make my back office life much easier. So that's a big part of the investment that we've made. Building reconciliation and billing services within our portal environment, building addictive insights into our portal environment so people want to come there and get access to their own business information, but tied together in a real-time fashion with their payment information. And so it's really about thinking beyond the payments model, ultimately as a SaaS platform and as a thought leadership platform to help people understand how do they get paid faster, how do they identify where they're going to have a collections issue, how do they think ahead of the ball in terms of strategies to collect from difficult to collect with segments. So that's really a lot of where the secret sauce of what we're focusing on is how do we go beyond just the network integration problem or the payment integration problem to ultimately the larger collections environment and the cash flow environment. But that is ultimately the job that we have to do, is to marry those two things together.
Yeah, and it's an interesting thing. Now, speaking about that, speaking about the sales, right? So far, you've got a very good logo behind you. Doing well in terms of the TPV and the value that you've provided to MultiChoice. How is this translating into new logos, right? And specifically, payments, especially enterprise payments, is a multi-year sales cycle. There's RFPs. There's all that kind of stuff. How is the success you've achieved so far, at least the good work you've done so far, achieving into new logos, and what kind of challenges are you facing there?
Yeah, no, I won't share some of our signed client names. I think those will come out in time.
Yeah.
But you're right. I think at the enterprise space, you have approved vendor challenges, right? We've kind of got to get through the approved vendor process. You have RFP processes, you have budget timing processes. To a large extent, those things, don't change, and you've got to be nimble about picking up opportunities where you can, whether that's identifying proofs of concept or prototypes or, off-budget initiatives that are popping up. And then to build your way into those trust relationships over time. At the same time, we've looked at channel partnerships, and we're working with some very large banks to go access their customers and help solve problems for their customers where they're already ensconced, but where they don't have solutions to solving that have the large-scale cash collections problems. They don't have solutions for solving digital payments or open banking, et cetera, outside of their own customer base. So we're looking at it from a different set of angles. We've built a very strong team of experienced payment experts in the market, both in Nigeria and in South Africa, complementing the team that we have in other markets as well, so that we've got the right people. But ultimately, it's about putting in the hours, right?
Yeah.
You've got to get into the market. You got to meet with people. You got to dial for dollars to some extent, and have a lot of boats in the water in order to find those opportunities. Right? Enterprise sales is what it is. I think we're unique, and you're right. We have a good logo behind this, but that gives us an opportunity to do what most fintechs spend many years getting to, which is the opportunity to run water through the pipes everywhere.
Yeah.
I mean, we literally are processing payments today in 44 countries, right? I don't think that's ever happened before. I think we have the largest network in terms of countries and payment methods in the market. And we're lucky enough to have a customer that actually has water in all those locations.
Yeah.
So we can afford to make our mistakes, right? We can make sure that we can identify errors. We can identify issues with settlement. We can work with our partners or with our banks to work those things out to provide a service that then works for everybody else who comes new to the table.
And I think two questions emerge from that. So, there's, I think, some of the interesting things that I've picked up so far. There is the ubiquity, especially the connection with cash, in the cash economy through integrations. And I'm sure that's in South Africa with the likes of Kazang and Flash. And then there's of course the debit order, problem that's faced, and it's kind of tied back to the same cash issue. There's the back office, recon nightmare that you're solving, which also is resonating. When you do your sales pitches, right? And I've done sales before. There's always a moment in the sales pitch where someone starts leaning in and starts listening to the conversation and paying more attention. It's like, I took this meeting because I was forced to take this meeting, but wait a minute, what are you talking about? Just repeat what you said. What do you find drives that reaction the most? What is making people really lean in?
Yeah, I think it's two things. One is understanding that we can help them solve their back office challenge. Right? The level of pain that people are experiencing on a daily basis, coming from these meetings, appears to be extremely, extremely high. I was with one of the largest retailers in the country, and we started talking about this topic, and you saw everyone in the room kind of look at each other as if their previous meeting had literally just been about how painful all this was, and that we just wandered into the right meeting on the right day to say, and we think we can help you solve this problem. So that's a big deal for people. The other area that's a big deal for people, I would say, is the failed debit order solution. Despite the fact that debit orders are very mature, that there's been some modernization of the infrastructure with DebiCheck, et cetera. What we hear from the larger debit order processors is they're still seeing 5 to 10% of debit orders failing. And an awful lot of folks we talk to effectively have one payment method, which is a debit order. And when it fails, they call on the phone, they chase the customer, and they hope for better days ahead. Whereas what we're providing them is a way for them to take that file of failed debit orders, hand it to us. We can dynamically provision it across our entire network and hand them back a payment link, hand them back proactive ways to send APIs. Those bills automatically are provisioned into every retailer in the country, et cetera. So they have a way to solve that problem for 10% of their payments that fail, other than just waiting for something good to happen. So that's really resonating with people who are very, very large and have built highly at scale infrastructures around debit orders, but still don't have 100% collection success rate.
And maybe you can also walk us through the channel partnership with banks. Just give us an example. I spoke to someone some time back who was talking about a large enterprise in East Africa that wants to go heavily into e-commerce, right? But the challenge they're facing is collections, just like you mentioned, right? Like they can't bring an e-commerce product into the market and ask a traditional cash-heavy economy to start paying using what do you call it, digital payments or cards. Like, that's not going to happen. But at the same time, the bank may not have the sophistication to provide that entire service, right? And in some cases, you, as you mentioned, you go into procurement challenges, right? Like how does that linkage between Moment and a corporate bank who is trying to offer a comprehensive payment solution to their client, how does that work? And the reason I'm asking is because amongst my audience is treasury heads at banks who may be interested to understand how such a thing could work.
Yeah. I've got a banking background. I was at JP Morgan. I think you've got a banking background.
Yeah.
So when you look at it from a context of a cash management platform or a payments platform at a bank, they're totally capable of sending an armored car to pick up cash. They're capable of letting you walk into the branch. They're capable in some markets of letting someone put cash into an ATM machine, et cetera. But what they're not easily able to solve is how does someone deposit $10, right, that they owe somebody for a pallet of Cokes, right? They're not structured for that. If you're a small retailer, you can't afford to leave your store to go 20 minutes away to go stand in line at a bank branch that, to be honest, doesn't really want to accommodate you to make a tiny deposit, right? There's a big economics mismatch. So if you can take the entire distributed cash infrastructure, and you mentioned Flash Traders, Kazang, we talked about petrol forecourts, all the retailers, et cetera. Anyone out there who might want to make a small cash deposit is probably a 3-minute walk from one of these locations, whether you're in Nigeria, South Africa, or anywhere else. There's this very vast network of cash collection points. We've now tied that together into a single network. So whether you're trying to pay your beer distributor for that pallet of drinks, or you're trying to gather funds at a much larger value and you want to put money into an electronic drop safe somewhere that's distributed to the townships, we can offer both of those opportunities to the market. And so you, the banker, don't have to say, can I afford to send an armored car? No. Do I want 10,000 people trying to queue up in the branch after hours to make a payment? Also no. Do I have to tell my consumer, my FMCG customer, that I'm going to send, he has to send a driver who might get robbed? Also no, right? So you're providing a solution that addresses a lot of problems, both by aggregating cash, but at the same time of also then making that equal to an electronic payments service. I mean, most banks have struggled to provide payment gateway services outside of their own card acquiring. They're typically not looked at as universal providers, and you very rarely find markets around the world where the bank is the dominant payment gateway provider, and it's not true in any of the African markets, either. So what we can do is work with banks and say, look, if it's your customer, it's going to go to your acquiring mid, right? If they're paying with open banking, we're going to expose your open banking payment method. And we're going to make sure that the settlement for those merchants all goes into your bank account. But at the same time, we're going to offer them the full set of services, not just the couple of services that that particular bank can provide. It's a very attractive partnership model to say, give me everything, make me competitive, but still make sure that I get the things what I want, which is the deposits, the deposit credits, the lending opportunities, and to expose my own payment methods to my customers as well. So we can do both of those in a way that I think is very partner attractive.
I think that sounds like a very promising, approach. And I've spoken to some bankers who are actively looking for something like that. They look at it as a white label. And I think this now leads to the next thing in terms of like Pan-African expansion. So effectively you're everywhere right now. But you've got key licenses in South Africa and Nigeria, if I'm not wrong. How does like expanding deeper into the continent? So you're looking at maybe countries like Tanzania, Uganda, Ghana, potentially North Africa. How do you look at expansion? What are the key dynamics you look at? In terms of like getting into a market in a deeper way? Is it the licensing? Is it the volumes? Is it MultiChoice volumes? Is it the opportunity? How are you thinking about that? And how are you thinking about your short-term, near-term Pan-African expansion?
Yeah. I mean, ultimately, you have to go where the money is, right? And not just the theoretical money, but where you have evidence of a customer with a pain point that you think you can solve. So we are trying to be selective on where we put most of our resources into. But at the same time, I think the point is clear that we also exist as a technology platform. We exist as a partnership platform. So we're able to work with great licensed payment companies across the continent to help bring network partners and merchants together in a way that delivers the outcome the merchants is looking for, whether that's reach for their customers or a back office experience that works for them. And at the same time, expose those network partners into a larger market as well. So it's the confluence of a business opportunity, great partners, and then kind of a macro opportunity in the market as well. But ultimately, when you look at Africa versus world, Africa is growing, world is not. Right? So we look at this as a long game, right? It's not a tomorrow game. We're in it and to win it, and we're in it to be committed to the market's growth and health over the long term. And that means we don't have to be super precious to say, hey, that market isn't quite big enough. In reality, we want to serve where the people are and where the business growth is going to be.
And what has surprised you? Because as you mentioned, Africa is a really trust-focused market. I was speaking to someone yesterday on how M-Pesa grew, and one of the things she said was how recruiting agents at the very beginning was easier because we had Safaricom behind us, right? So if we didn't have Safaricom as a logo, it would have been completely difficult, right? Now you guys have MultiChoice behind you. What are some of the assets that you've really been impressed by? Like, wow, I didn't know that this was such a useful asset to have, and MultiChoice has really come through in this specific case.
I mean, it's actually almost hard to overstate, right, how deep their experience is across the continent, how much brand equity they have, how much trust they have, the deep regulatory relationships they have, the door opening quality that they have, whether that's with banks or payment companies or technology partners. It's really across the board. And in addition, you're talking about 10,000 people, right, with expertise across the continent, right? So for a very small startup, right, we have an awful lot of throw weight behind us of a public company that's really been there and done that. So we're very lucky to have that as a bulwark for us.
And looking ahead, like you've built a payments platform, and one of the differences is that you've really built robust data and analytics and all that on top of the payments platform. How does it translate in the near term in terms of like a broader fintech product, right? Because with the trust of MultiChoice and with your capabilities, I'd imagine that going beyond just serving enterprises is a real long-term game, right? Like to become a proper fintech. How do you see that playing out, and what makes you confident that that's something you can pull off?
Well, I hope we're a proper fintech now, but you're not wrong. I think there's probably three things that come together to build a great fintech. One is distribution, and I think as we talked about, we have some very unique assets on our side in terms of distribution and reach. One is liquidity, right? So the ability to get a lot of money moving. Because ultimately, payments don't lie, right? When the money moves, there's value you can build on top of it, whether it's at rest or moving. And the third thing, and then the long-term value is ultimately data, right? The more the more you can build on top of it and create new value. So one example of how to answer your question is, given the affordability issues that I mentioned already, right, and the enormous challenge people have meeting their daily expenses. There's a credit problem for the consumer. But if you're a retailer or a merchant, you've got a credit problem also, which is your customer can't afford to buy things from you. So you find that a lot of different businesses across the continent who are in the position of becoming either intentionally or unintentionally credit providers. And that means that they're making credit decisions every single day. One of the things that we have unique insight on is how do 22 million households pay? Who pays early? And yes, many people pay early. Who pays on time? Who always pays late? Right? Where do they like to pay? Where they like to pay by day of the month? Where they like to pay by day of the week? Who pays at premium locations? Who pays at non-premium locations? What do they prefer? So if you're in the position of trying to make a credit decision, we have some very, very unique ways that we can help merchants make that decision intelligently. And at the same time, if you're trying to collect funds, we know an awful lot about people's preferences about collection, and we can help build a collections strategy that's going to work for an awful lot of customers. Somebody on our team highlighted that we have more people making payments through us today than people actually pay tax in South Africa, right? So it's a big number, and it's a curiously large platform already.
Yeah.
And we try to be very responsible stewards of that data. But ultimately, bringing those three things together, the distribution, the liquidity, and the data, we think creates something special over time.
And I think, just to make it more like tangible, right? So assuming you have 3 or 4 key merchants, right? And I'm paying MultiChoice through you. I'm paying, for instance, let's say for insurance through you, and I'm paying for some other. I'm also doing e-commerce through Moment, right? Does that mean that Moment knows that Samora paid on the 25th for his DSTV subscription? On the 5th of next month, he paid for insurance, and so I have a comprehensive profile of how Samora is doing his payments, right? Is that kind of what the data is structured to do, right? And if
we would certainly know that.
Yeah.
Right? We also know whether or not you were on time, right?
Yeah.
We also know if you broke it up into installments. We know where you paid and how you paid.
Yeah.
So to build on your example, you as a consumer, right, could opt in and say, look, I want you to aggregate my bills for me. Make it easy and efficient for me to pay my bills.
Yeah.
Because we know a lot about you, you could picture us bringing a credit partner to the table and saying, look, not only am I going to help you pay your bills efficiently, I'm going to help you pay them in a way you can afford as well.
Yeah.
So you can absolutely picture a consumer-facing, account-based model that brings together what we have that makes life easier for a lot of customers. Similarly, on the small business side, you can picture an awful lot of small businesses who can't necessarily afford a physical terminal, as you mentioned before. And we can provide them a digital solution, an invoice collection solution, an affordable way to collect funds over WhatsApp or SMS, in addition to other options. And at the same time, we can partner with their terminal provider to provide a complete solution as well. And really open up opportunities for that small business, and then get those consumers and the small businesses to work together. I would probably not overlook the fact that we have the ability to encourage people with cash back, right? So pay your bill on time and get some money off of your DSTV bill. We have a vouchering platform, and we can offer value-added services for merchants as incentives as well, or help people build custom incentive programs. So there's a lot we can already do in the rewards and the value space that bridges onto demand generation. It makes it easier to encourage customers to do what you would like them to do and give them an incentive to do so.
And two things emerge from that. Are you starting to see some of those value-added services kind of like having an impact on MultiChoice, in terms of like all of a sudden there's some things now you can do with MultiChoice that they weren't able to do before?
Yeah, absolutely. So if you look at the vouchering piece, and again, it sounds a bit like an old-fashioned solution, but there is a very beefy side of the cash market that has trust issues that are better served by giving them a prepaid instrument, whether you consider it a voucher or a gift card or a PIN. There's different terms for it in different sub-industries, but ultimately someone wants to come and hand over cash and get back something of value. So when we relaunched Showmax a year ago, we launched a USSD-based voucher solution in the market in Kenya. We've launched a version of that same platform across South Africa with multiple partners. We're doing an incredible job, through Capitec, distributing vouchers to their customer base, which is a big part of the app experience that they offer. So you absolutely see vouchering as a key part of the market, in addition to the cash market. And then, as I said, because our entire platform rolls up into a single receivables platform, anybody that presents a bill to anybody in the entire market, whether that's as I said, a periodic utility style bill or a credit bill, or just an invoice or an e-commerce transaction that's pending payment, all that can then be brought together so a consumer can have high trust that this device, these payment methods, these bills can all be paid securely in the right way. And the merchant can be confident they can all be paid and then posted instantaneously to their back end, regardless of how the consumer chooses to pay.
That's very, very cool. And I think, there's so much opportunity for Moment, at least from, there's of course there's an enterprise piece, there's a Pan-African piece, there's an SME, piece, and there's a consumer piece, right? As Joel, how are you looking at sequencing this in terms of like this? Because as a CEO, your team needs to focus on one thing and one thing only for some time, and then now layer on the second thing and then focus on that. What is your immediate focus? What KPI? What are you keeping your eye on the ball on?
Yeah, I used the iceberg analogy earlier, and ultimately investing in reconciliation, settlement, the core billing infrastructure, the APIs that we use to connect to partners. Those are the foundational, most important things. And to a large extent, they almost don't have a UI. Right? The complex elements of them are not the UI or not did you put the button in the right place? It's making the underpinnings of settlement, reconciliation, and moving money work seamlessly. And we're on our third version of our in-house recon and settlement platform. We brought in some third-party AI capabilities as well. So really getting that right is really the foundation of the business. And experiences, as much as we consider them very, very important, and we're proud of some of the experiences that we've built, it's the stuff that's below the waterline that's really essential. Because that's what makes and breaks a building over time. And when you think about the fact that we're in August now when we're recording this, we started processing payments January a year ago. So 20 months ago, we started essentially from a cold start, and now we're processing $1.5 billion a year for tens of millions of people. And we've done that because we've got the infrastructure right as the foundation, as the focus.
And just for curiosity and kind of like educating future payments founders, is that primarily like a focus thing or a technology problem? And what I mean by that is it just that as a founder, you should focus on the underlying iceberg, or the specific technological capabilities you need to have to kind of build that iceberg, right? Because one thing we see a lot in the market, like one thing I see a lot in the market is that, payment companies raise money, you reach a specific TPV. After some point, things start breaking down. You hear all these kind of things in the market that, payments are failing, financials are messy. Everything is kind of like the wheels are falling off the train. So what is it that you need to get right from day one to build that iceberg? Is it a mentality thing, or it's a technology thing?
I think it's two things, one of which you already mentioned. The first thing is people, right? There's no substitute for hiring the sharpest, most passionate people that you can find. That is our primary hiring criteria, ultimately is culture. And I define culture to mean people that want to solve hard problems together, right? There's virtually nothing that's truly hard in the world that one person solved by themselves. And we have, I'm afraid to say, turned down a lot of incredibly competent, gifted people, including people I've worked with for more than a decade, because we didn't think they were a good culture fit for the organization. And so getting the people right and really protecting culture is by far the number one job. The second one that you already kind of alluded to is not falling for feature creep, right? And really focusing on getting the important stuff. I've been in the industry quite a long time. I have completely the ability to blow up a roadmap with feature creep, with confusing people, getting them focused on shiny objects, etc. And so I work really, really hard to not do that. I've failed at that in the past, and I try very hard in this role to not do that and really let people know, let's get the thing done right and not try to move to the next thing until we're very confident with how this works. And we've built a great product team and a great engineering team, hold us accountable to building things the right way and not to move faster than we should based on the strength of our infrastructure and the strength of our capabilities.
Yeah, no, that's very insightful. I mean, you're right. There's a huge tendency to for the feature creep, because it translates into product announcements, that translates into momentum, but sometimes it goes against the underlying needs of the business, which is stability and reliability, and building that record engine. And working in banking in the past, like recon is one of the most boring things you can do, but it's extremely valuable. I mean, in finance, the most boring things are usually the most valuable aspects of finance and payments. But now turning,
Exactly, and that's where you want to be bulletproof, right?
yeah,
Right. There's no world in which a finance partner of a customer is ever going to trust you
yeah,
if you don't give them the right amount of money.
yeah, yeah. That's the thing. And turning into now like Pan-African expansion, like one challenge you foresee if you're promising people, if settlements is one of the big promises, like just cash flow management and settlements, one of the big challenges is going to be capital controls. And I know this very well because like I was in Burundi. MultiChoice was one of our clients, and they had a lot of money locked up in Burundi for a long period of time, right? So that's trapped liquidity for the treasury. And so, of course, now Burundi is a very unique market, but there are much bigger markets that are just as complicated. So how are you thinking about solving this problem? Does stablecoin come into the conversation? What are your thoughts around that?
Yeah,
Or,
no,
or
you're
you could you could
100%
you could
right.
you could say I'm going to cross that bridge when I get there, but happy to have your thoughts on that.
No, it's a good question. I'll give you the straight answer now,
Yeah.
and then we can figure out where the bridge goes from there. I mean, the first thing is do it the right way, right? There's a saying that you want to be more pure than Caesar's wife, and I think this is one of those examples where you simply don't want to do it the wrong way.
Yeah.
Every week in the payments industry, if you've been in payments long enough, someone's going to call you and say, I got a friend with a bag of money, can you help me move it? That is not a healthy way to build a business. Same thing in the settlement business, the cross-border business, et cetera. When you're handling somebody's money, you need to know that the entire chain of custody from yourself, from, I suppose, the consumer to yourself, to the outbound legs, et cetera, is passing on licensed rails through clean bank accounts, clean financial accounts, et cetera, and that you understand what that chain looks like, because you're going to find under every rock a problem. And so we have tried very hard to pick the right partners to work with the right licenses. We're building out additional settlement network capabilities now, and we're in the middle of a whole sequence of POCs with numerous partners, some of which leverage stablecoin in their infrastructure, some of which don't leverage stablecoin in their infrastructure. And absolutely the slowest part of the whole thing is the KYB, right?
Yeah.
Making sure we really understand every single thing about that value chain. So we don't find ourselves in a situation either with stranded capital, which I think everybody would tell you, even their most trustworthy partners have challenges, right, delivering funds. And we also don't want to be in a situation where the partner's doing something under the covers. That's going to have an adverse reaction. It's not just bad business. We also have a lot of responsibility as well, because a partner like MultiChoice is very well known. We don't want to challenge their reputation either.
Well, that makes sense, and you're right. You have to do it the right way. There's all these newfangled ways of moving money around, but the minute you go foul of the regulator, you kind of like ruin all
You're doomed.
Yeah.
Right? You're doomed. You don't get a lot of bites of that apple.
Exactly, and you ruin all the good work you've already done. Speaking of the good work you've already done, as Joel, what are you most proud of from the last 20 months or even beyond? It's been more than 2 years of working on this project. What are you most proud of?
100% it's the team. Right? There's no question. Like that's the part of the job that's enjoyable at this part. At this point is identifying the right people, giving them hard problems, telling them that I trust them, right? Giving them as little coaching as they can stand. And getting people to solve these hard problems together. The most satisfying way in the world to learn about an issue in the business is after the fact, right? Hey, something happened, people jumped on it, the problem was solved. By the time I get to it in Slack, it's already been solved and communicated. That's a great feeling to have when people are off doing the right thing. When they're building features that you're barely conscious of. We have weekly product demos, and every week I'm like, oh, I had very little idea that we were as far ahead with that as I thought we were. Same is true in our policy team. They're way ahead on some things across the board, whether it's engineering, it's product, it's operations, it's policy. It's the confluence of bringing all those people together to do hard things together. That is where the satisfaction comes from. I have been we have a ritual in the business, right? What I told the team a long, long time ago was when you deal with very large platforms, the numbers start to get big very quickly, right? And I've worked with some situations before where that has happened. And so we literally have a piece of paper with, $1, $10, $100, every milestone, right? And whenever we cross a milestone, and they're very large numbers right now, everyone stops, everyone pauses, someone turns on a phone camera, someone says some words, et cetera, to just recognize how hard it is to get to these things. Because, doing your 100 millionth dollar is way, way easier than doing the first dollar or the first $100. Like those things are so freaking hard. And it's very easy to forget that once the numbers get very, very large. So we like to reflect on how the journey has been, the pain we've gone through to build the platform that we think we've built, and then to celebrate these milestones as a team as we go along.
Yeah, I mean, 1.5 billion annualized is impressive. I mean, great payment companies have taken way longer to get to that. And what gives you sleepless nights, or is it just smooth sailing?
Well, like I said, good team. So I sleep better with a good team. Honestly, it's just a bit of impatience, right? Because I know what great stuff is in our roadmap. I know the amazing work the design team has done. I know the great work we've done on the data side. I know all the stuff that's coming up. And again, I'm trying not to disrupt the apple cart and go faster than we're ready. So like I go to bed thinking, oh, I can't wait until X happens, right? And whether X is tomorrow or next week or 3 months down the line, I have a lot of positive forward anticipation at the problems that we're solving and will be solving very soon for some very exciting partners.
Now, those are good problems to have. Those are good nightmares to have. I mean, I think many people would be envious of your situation. But I think that's a good place to now start winding down. And, this has been an incredible conversation. I think very useful insights around, building the product, starting from a clean slate, the focus on reconciliation. I actually wrote an article some time back about the iceberg theory of fintech. And, the whole idea was, I think you worked at PayPal and how, the team at PayPal worked so hard to deal with this kind of like Russian fraud problem, right? In the early days of Max Levchin. And it actually gave them the real competitive advantage. That's actually what made them a successful fintech. And so to hear it from you is very good.
Yeah, no, that's a good example. But there's another PayPal example that I use as well, which nobody talks about, right? Which is the legal team, the compliance team, the entity framework they built around the world. There is just as much innovation in the business model and the legal model at PayPal as there is on the technology side. And that most fintechs, I'll have to tell you, have no idea. They simply don't know where that competitive advantage came from, and they're surprised every day that they don't get the same results.
And it's a theme that keeps repeating in my podcast and even in the newsletter, where operators say like where you think the value is not actually where the value is, right? Like I had someone the other day talking about M-Pesa, and it was an interesting conversation because she was like employee number one at M-Pesa. And her main thing was like we were on the ground, like our ground force was so strong, like we were having sleepless nights, traveling day and night to kind of switch this machine on. And so people look at it and say, I need to build a platform, but you need to build a sales team that was just as robust as M-Pesa's. So it's an emerging theme where like the real value is not where you think it is, it's somewhere else, and you need to copy that instead of copying what you see on the press releases. But thanks, Joel.
And be creative about it. Yeah. No, my pleasure. No, I think just give you an analogy for that one. It's almost like when Netflix came out in America and they had the red paper envelopes, right? Their competitive advantage was like the postal service. It was not a technology at all. It was a late advantage. I think any company needs to understand where their sources of competitive advantage are and leverage those, right? So don't focus on the areas where you're weak, focus on the areas where you are strong, and lean on that.
No, thanks. And always a pleasure to speak to you. Always full of insights when we speak, and I'm wishing you guys all the best. And yeah, man, this was an excellent conversation.
Appreciate it. Thanks for the opportunity, and look forward to the next one. We can talk about even more what's under the waterline.
Yeah, for sure.